Welcome to the Daily Update. This is being prepared Thursday, August 25th, where I'll do a full-blown look at how the market is shaping up at the time being, and then we'll see how things look for Friday, August 26th. And initially, I did not plan on doing a full-blown video for Friday, but we had a pretty solid update on Thursday. A lot of our charts showed improvement. A lot of our scenarios showed some improvement, and it's looking like Friday could be a real pivotal day. We have Fed Chair Powell, who's supposed to give a speech. I believe it's at about 10 a.m. Eastern time in Wyoming. And you can pretty much assure yourself that the markets are going to hang on every word. The Fed still has a hawkish stance where inflation is their main concern. What they're going to be looking for in this speech is he starting to back away from that a little bit? That's what the market is hoping for. That would be a Fed pivot, and from turning more hawkish then into more dovish in their stance, with the idea that possibly inflation has topped out and is starting to come down. If we hear more hawkish talk, that could be really negative on the markets, and we could go back into this type of a situation that we've been in for most of the week, where the markets don't really have a lot of conviction. They're going sideways to down, and it could change the whole situation. But since there was some real improvements in Thursday's session, I thought I'd go through and do a full video. All right, so let's go back and talk about what happened. We had a positive open, and right off the bat, we got above R1 at 41.58. We even made it up to R2 at 41.76. As the day went on, prices chopped between R1 and R2. And it was at this point when I said, hey, I'm not going to be making a video after today's session. Well, that kind of changed going into the close, because we saw some late day buying that took us all the way up to 4,200, just a little bit below that right now. And that was a breakout. And we ended up closing just about at the high for the day. We ended up being up 1.41%, a pretty solid day. Volume continues to be below average. The technicals are kind of mixed. We were looking pretty negative short term. Well, with the advance on Wednesday and then Thursday, things are looking to improve a bit. Intermediate term, we're still more mixed. It takes a little bit longer time for those indicators to switch over. So we're not really seeing anything real definitive right now. And of course, long term, we're still negative overall. Inflation and interest rates are the real concern right now. The geopolitical events that are happening, again, I've mentioned the assassination last weekend in Russia that might have had some kind of a catalyst for escalating the Russia-Ukraine situation, but that doesn't really seem to be happening. We just want to be aware of that, just in case it comes to the surface. There's still the debate going back and forth. What is a recession, and are we in one? And then I've also highlighted Fed speak because of what's happening in Friday's session with Chair Powell speaking. What are some comments? We did have a really narrow daily range right up until near the close. We ended up getting back above both of the 20-period moving averages, both the simple and the exponential, and we're right at the 200 exponential moving average. The important one is the 200-day simple moving average, and that's still above current prices. There's a lot of anticipation ahead of Fed Chair Powell's speech on Friday. The sector rotation and our positive setups, they showed some improvement. You had a good solid update. Growth did pretty well. The sectors did pretty well. So we're seeing some improvement there. And we'd like to see some more, but they're just not falling apart is really what I'm saying. The 10 to the 2 and the 10 to the 5, they're still inverted. Interest rates and stocks have a fairly strong inverse correlation, and we saw that even played out more in Thursday's session. We're seeing things switching back a little bit more to normal, where the dollar and stocks are in opposite directions. Interest rates and stocks, opposite directions. Oil and stocks, more in opposite directions. And I'll have charts to go through and show you that. We're still right at the middle with fear and greed. So this could tip either way from a sentiment standpoint. We did have jobless claims that came out on Thursday. They were at 243,000. That's lower. They expected them to be at 253,000. So we're seeing that coming down a little bit. And then the revised GDP for the second quarter that came out, it was still negative, but it was less than before. at minus 0.6%, where last time, this is what freaked everybody out when we were at minus 0.9%, because as we get further away from this report and the data that is used, it's older and older news, so it has less and less of an impact. Also, another thing that was a bit of a concern is the price deflator. It was revised up, where it had been at 8.7, it was revised up to 8.9, which again suggests a little bit more of an inflationary situation. Our trend is positive, but still weakening overall. It was almost getting ready to switch over negative with the ADX, but with the 2 up days we've had now, it's still weakening, but it's hanging in there being positive. I've switched our bias back to positive because we've had 2 up days now, but I still have our momentum as mixed because we're right on the fence right now. We're not really seeing a lot of across the board conviction one way or the other. Let's go back and first look at sentiment. We're right at 49 now, which is just about at the midpoint. So we're not showing any kind of extreme sentiment currently. We did get the American Association of Individual Investors. They actually came down a little bit with the declines. Remember, these folks tend to react to what's already happened. This is slightly old news. It had been showing a bit of an improvement, but has since came down in the latest reading. Also, the right-X bear-bull ratio. Those folks that are in bearish mutual funds against those that are in bullish mutual funds, we're still kind of midway. We're not really leaning towards one side or the other. If we have an up day, this tends to drop. If we have a down day, this tends to go up. It goes the opposite of the market. Here's some Isabel net charts. This is just showing the valuations against the percent deviation from the exponential growth trend, where the green right here, this is how far away, or this is the deviation from the growth trend. And it's pretty high right now, where here is the PE ratio. Now this is cap. This is the Shiller cap, which is calculated slightly different. And it just shows that there's a real wide gap between the two right now. And again, I'm not really sure what to take from this, because some of these charts, you can twist them all around to make them say whatever you want to say. This is suggesting that we're probably still overvalued. All right, then we have short interest, which still is pretty low. So if we really start to go higher, it's likely to be that people are buying to push prices higher rather than closing out short positions that they have to buy to close out. And it's been bouncing around along with the market, but it's still kind of a low percentage overall. This is a market sentiment indicator. This is kind of the opposite of what we're seeing, where when we get up above this top dash line, that's showing extreme positive things. Well, when we turn red, that's turning more negative now. So this is suggesting that maybe we still have more room to fall. Another chart is the Goldman Sachs. These are the prime services hedge fund leverage. This is how much do hedge funds have leveraged right now, or their gross exposure overall. This is the light blue line, and it's actually been decreasing and bouncing around, where their net exposure overall has also been decreasing as well. I cover hedge funds in the class, the first class that's available on YouTube, but we don't really pay attention to them until maybe some of them cause some problems or a few of them go under or things like that. But they are considered big money, but they're not necessarily considered to be the smart money out there. So they can sometimes look like they really know what they're doing when really they don't. Buybacks continue to increase. Way over on the right-hand side, this is the latest reading. Also, this is showing the weakness that we're seeing in real estate. The dark blue, this is showing how real estate, the pending home sales, have really been declining when compared to other recent years. This is showing on real terms. This takes inflation into account, and this is kind of a sobering chart. This basically just means that all of the gains that we saw since the COVID plunge on a inflation basis, we've given all that back. And now we're trying to see, okay, are we going to find some support right here where we've been at for quite a while? And are we going to continue to bounce higher? Another one, this is from Goldman Sachs. They're just giving their forecast for oil, which is a lot different right now than what the futures market is predicting. And then here's the margin debt. And the only thing to really take away from this, you can pause and look at this and kind of dissect it a little bit. I've been pointing this out with the current market valuation charts that I showed you in the weekly videos that I do. But this is starting to get extreme negative. When we go down, people don't use as much borrowed money to buy stocks. And so the margin debt has really been decreasing. Well, since we've been bouncing up a little bit, that's starting to go back up. People are feeling a little bit more positive about things at the time this chart was prepared. Also, this is another index that I show roughly once a month. The purple line here is the S&P, and the gold line here is the truck tonnage index. And you can see over a period of time, they tend to not get very far apart, and they tend to move in the same direction. Well, they're still pretty far apart from each other right now. So does that mean people are going to go out and buy more trucks, or is the S&P going to end up coming down to get that back in line? This is the Fed's quantitative easing against the S&P 500, and not a real surprise here. This is historically back to 2008 when they were doing QE at that time. When they're adding money, that helps the stock market. When they're taking money out that they were putting into the system, that tends to really have a negative impact, or Fed taper, or whatever you want to call that. That has been a lot of the pressure that we've been seeing in 2022, is decreasing their balance sheet. Then this is the Case-Shiller house price. This is showing, again, some weakness in real estate. The light blue line just shows how the prices are starting to roll over, but the regression, and this is a leading rate in the month's supply, this has really been falling off, where you can see over a period of time, they tend to move in the same direction. Right now, they are very far apart from each other. Something will likely have to give to get these two back more in line. There's another one. This is global. Way over on the right-hand side, this is showing global inflation. It's not just in the US that this is being battled. It's in Europe. It's in Asia. Pretty much any country you can mention. I mean, talk about like Brazil and some South American countries that just have astronomical inflation right now. And this is just showing how it's really, really been going up overall. Then this is the S&P 500, and this is what they tend to do on each day of the week, going back to 1928. I don't personally put a lot of stock in this, because even over on the right-hand side, okay, 54.6% of the time they go up on Friday. Well, that's still a huge percentage of time that they don't. And so just like on Mondays, they have a tendency to be down overall since 1928, but sometimes we have really big up Mondays. So I don't really like to take this and use broad generalizations to make decisions, but that's just where I come out, because every day is unique in and of itself. Here is the Goldman Sachs projection for the euro. The dollar's been coming back and doing stronger again. Well, Goldman Sachs doesn't expect that to last. They expect the euro to really pick up and move into 2023. Here's our sectors, where over on the right-hand side, growth really had a good day. It was up 1.6%, where value was up 1.14%, and growth also outperformed with the mid caps and the small caps. Not by very much, but they still outperformed. The VIX, with the two up days that we've had, we've seen the VIX go down both on a closing basis and on the bar chart. We're still above 20 right now, but it just shows that fear has subsided, or less hedging is actually taking place right now. And this is the volatility of the VIX. The VIX of the VIX, it's also been decreasing over the last few sessions. The Ulster Index, maybe the daily chart's going to come back and kind of help us now. It's been picking up a little bit. We're getting up closer to the moving average, where I've been relying more on the weekly chart, where this is more indicative of what the real sentiment has been like. And we're just about in the middle right now, which coincides with our fear and greed index. We're down 12.86% from the all-time high. The equity put call ratio declined on the one-day chart. It is still increasing on the 5-day chart. Looking at some support and resistance, here are the pivot levels for Friday's session. And if we really get moving one way or the other, we might even have to break it out to R3 or S3, depending on what happens, if anything. Here's a daily chart at the bottom showing that volume is still below average. This shows how we came right up to the 200-day moving average. We've been falling back. We went sideways for a couple of days and now are trying to go a bit back into a recovery. We're slightly above the shorter term resistance that we broke through before and broke down through again. Can we stay above this short term resistance? Here are the pivots for the month of August with the updated candlesticks. Here's one fib retracement chart going back to the low in 2021 where we came down. We actually broke below that. Then we were able to get back up and go above a 50% retracement. We fell back down to the 61.8, but now we're finding some support right there and have broken back above that. There's another fib chart also showing that we had come down through some support, but we never really got down to the resistance, the support here at this area. But can we break back through this resistance at the 38.2% retracement level? All right, our sectors. We had materials, communication, tech, all the sectors were up, with staples being in the last place. So this was more of a growth day that we saw in Thursday's session. Here are the scooter scores showing energy, utilities, and industrials are all over 90. Communication is still down in single digits, giving us a 0.8. So it's looking the worst right now. Our sectors show how energy has been bouncing back and utilities have been hanging in there, but all of the other sectors still continue to be negative. Here are the indexes going back to the S&P all-time high. No real changes here. The only thing that really changes on these charts are the percentages from one day to the next. Technical alerts, they were all positive. None for the S&P, where the NASDAQ got above 12.5, then 12.6. The Dow got back above 33,000, which that's what the financial media loves to talk about, even though I don't watch the financial media. We had a BPI bullish cross in the materials sector, and they were a sector that performed very well in Thursday's session. Here's some of the newer charts. When you look at the scooter scores for the indexes, right now the mid caps are in first place at 80.1, then followed by the small caps, 76.2, followed by the Dow at 74.7. Then the S&P still has some weakness built into it here with 68.2. The Qs are in last place at 48.4. In a good solid environment, we want to see the Dow, the S&P, the Qs, we want to see them higher and get up into the 70, 80, even 90 range. And they're not at that level yet. Here's our intraday chart where we had a higher open and we went above R1 almost immediately, up above R2, tried to come back down, spent a lot of the day bouncing between R2 and R1. And this is what I thought. I thought we're just going to kind of end like this, but you always watch the last hour because that's when the professionals come in and do their thing. And they took prices higher and we closed just above just below 4,200. Our trend, the ADX is declining, but the green line is still on top, and with the last two up days has turned back up with the red line going down. The Arun, not really helping us much right now. It's still showing a decrease in buying and also a decrease in selling. Looking at breadth, we saw a really solid up day based on price. We saw a nice day based on volume, so there is some improvement. And with volume, we're starting to come back above the moving average. The advanced decline ratio, after really taking it on the chin for a couple of days, has bounced back up and is looking, I don't know why this is changing, and is looking more positive right now. New highs, new lows. This is a little concern. It's turning up a little bit, but our 5-day and our 10-day are still declining overall. Accumulation distribution, after coming down to the moving average, has turned back up. Some short-term charts. We had a little bit of a change with the decision point scorecard. Their PMO, and I'll show you this as well, it crossed over negative. That's the one change. Intermediate still looking okay. Long-term is still down. Here's another short-term fib level chart. This is going from the high that we set back in March to the low in June. and how we bounced up off of that. We were able to retrace 50% of that, and then we've been falling back. Can we get back to this level and even break above it? If we run into some trouble, are we going to come down to about the 4,017 level? Will that act as support? We're getting back some of our moving averages. We're right at about the 200-day exponential moving average, and we're slightly above both the 20 simple and 20 exponential moving averages. This one is the simple one. This is the important one. This is where we came right up to and bounced back down. At some point, if this market is going to go from being negative to positive, it's going to have to get above the 200-day simple moving average, and it just hasn't done that yet. Here's the 20-period moving average where we are currently just above those. On a one-day basis, we had a good solid up day, so we went a little extreme positive with our advanced decline ratio. In our Stochc RSI, which had been extreme positive, then we had some down days, one extreme negative. It's showing improvement, as is the Williams percent R. The force index has switched slightly back over to being positive, and the Swinland trading oscillator, based on price and volume, they're still below zero, but they're starting to turn up. The McClellan oscillator is above zero and advancing. So that's some of the short-term improvement. 20-day exponential moving average turning up and not extreme, 50 turning up and 200 turning up. Stochastics, after being overbought for a long time, shot down, became oversold, are bouncing back up. Intermediate term starting to turn up. We're still rolling over from extreme positive with the longer term stochastics. Intermediate term, looking at a 9-day exponential average of the advanced decline ratio, we had become pretty extreme positive just about at the time we hit the 200-day moving average, and we bounced back down a little bit from that, and we're starting to show some improvement, both based on price and volume. The Sean trend meter is showing a little bit of improvement after turning more negative. Here's the PMO that crossed over, and that's where we're getting it on the decision point scorecard, that the PMO signal is now negative, and we crossed negative before that based on price and volume. The PMO study, actually, after being extreme positive, did go extreme negative, but is showing a nice little bounce. The buy signals are still headed down, as are those PMOs that are above zero. Sean trend, I don't know why I say that. The Chaikin oscillator, this is starting to turn up. And I pointed this out in the last full-blown video where we were going up higher with the S&P, but we saw a negative divergence with this oscillator. Now it's finally starting to turn back up. Can that continue? Here's the Chaikin money flow, still positive, but showing some weakness. Volume is just pretty anemic right now. The vortex, it's bouncing around bumper cars. It actually switched over negative, but with the last two up days, it switched back over positive. Summation index, after getting an extreme high reading based on price, starting to turn back up, both based on price and volume. Our oscillators, these are still pretty much negative across the board now. So that's part of the mix that I'm talking about in the intermediate term. Some of our moving averages, some of our other indicators are looking more positive, but we're seeing a lot of negative crosses with our oscillators. The BPI hadn't really broke down all that much. It's still at a fairly high level, even though it's been declining overall. Ease of movement came almost down to its line in the sand between positive and negative, and then turned back up slightly. Ultimate oscillator also turning back up, but still below 50. Money flow also turning back up. RSI, after giving us an official overbought reading based on the 14 and 9, they came down to the 50. This actually dropped a little bit below, and they're starting to turn back up. This is still kind of concerning. When we go back 50 days and look at the rate of change, we're still pretty extreme positive right now. It's going back and picking up the lows that we had back in June, and it's still seeing that as a pretty excessive move right now. TTM squeeze, also, it's still positive, but it's declining. This is really starting to weaken. We're going to need to see some follow through price. Can it get above the moving average? That will really help this to turn up. Or this could continue to fall if prices come down and also fall. Our different charts, the Heikin Ashi, after turning negative, has now switched back to slightly positive. The Kegi is still positive. The Renko is slightly negative with a red box. 3-line break also negative, and nothing new on the point and figure chart. Our different systems, we switch back to positive with the elders with the SPX and the SPY. We're still negative with the SAR because the dots are above. See this mix that we're getting right now? And it's probably really hard to see, but this is a light blue. As we've been coming down, that's more of a, it's still positive, but what do I say? A negative positive. It's a weakening positive here. Then long term, we came right up to the 200-day moving average in our longer term rainbow. Coming back down, can we break back up through some of these moving averages? The 50 period turned up, 150 and 200 also turned up. So we're still seeing some improvement under the surface. The special K is still rolling over there. That's a longer term oscillator. We're back to positive with the diamonds, and here's the Dow. And here's the Q, also switch back to positive, and here's the NASDAQ 100. And the Vixen, with the down days, we've seen the Vixen really decline as far as its volatility. The NASDAQ, again, had a pretty good up day. Didn't quite fill all of this gap in here yet. That would be very helpful if that happened. The mid caps also had a pretty good day. The Wilshire, also pretty good day. And then the dollar, which shown some weakness, then started to roar back, has since shown a little bit of weakness. So here's the correlation between the S&P. We're really strongly inverse right now. So on Friday, I would watch the dollar. If it's going down, that might mean stocks are going up, and vice versa. Gold, trying to bounce back just a little bit, as is silver. Oil is at 92.52. And here's another thing, where the oil and the S&P, they're also a pretty strong inverse relationship. Keep an eye on oil in Friday's session. If it's going up, that might mean the S&P is going down. Bonds, still kind of struggling after looking like they were building a base, came up and have since been falling back. And I don't know why this has a mind of its own right now. Here's our world bond index bouncing up just a little bit. And the stock to bond correlation, neutral, since we're in the plus to minus 0.25 range. Our yield curves, we still have the 10 to the 5 that's inverted, the 10 to the 2 that's inverted, and we're keeping an eye on the 10 to the 3 month. It has yet to go inverted. Here's the tech sector to the 10-year yield, also very strongly inverse related right now, or correlated. Here's another fib chart going from the high, the all-time high, to the June low. We were able to get back above 50%. We dropped down below that. Can we get back above this level, or are we going to drop down? Interest rates fell in Thursday's session, at least longer term rates did, but shorter term rates continue to go up. And now our scenarios. All right, we're still working off of this after giving us an extreme negative reading, bouncing up. Yeah, there's some weakness in here with those stocks that are above their 200-day simple moving average, but this is still a valid signal, as is the 50 simple moving average. We got pretty extreme, came down, and we're trying to bounce back up. The mid caps are showing some improvement, as are the small caps. The 10-day average of the highs to lows, after giving us a pretty extreme reading, has fallen back, but it's still positive overall. And then broad market, with the 5-period high-low average, we're still right around the 0 level. It'd be nice if we could get above 0. That would show a lot more health, but we're just not seeing that yet. Our equity put call ratio, here's the spike. We came down, and now we've been coming back up. Small cap index had a good day. And here's our ratio showing that small caps ticked up ever so slightly in their ratio to the S&P. So now we haven't really come back to this previous spike on this red chart. If we could break up. So another thing to be watching on Friday, at least I'll be watching, are small caps. If they're outperforming the S&P, that would help this ratio, which could also give some support to the S&P 500. Here's the S&P to the 10-year, also really strong inverse relationship right now. Here's our sector rotation, showing some improvement with the Q ratio. discretionary ratio, and the growth versus value ratio. They all turned up slightly. Here's the large, mid, and small cap ratios turning up, not as much with the mid caps, but a little bit more with the small caps. And this is showing the correlation between the S&P and the 2-year yield. They're tending to go in opposite directions. Our 2-year yield, we can't really use this as part of our scenario right now because we're so close to that spike that we've been close to already. The staples were up 0.46%, so this is still looking pretty valid. This is the spike that we're working off of. We've been falling back. Yeah, we've been bouncing back up, but if this can continue to fall, that would mean that this could be a much more valid signal. All right, so what's our outlook then? The technicals, yeah, they're improving. Has the bounce started? Because the last hour, this is when the professionals close the market. Did they start this run up before Friday's session? Or is it going to continue into Friday's session? That's merely a guess at this point, but not necessarily a surprise. This is one of those things where you'll only really know this in hindsight. So if we saw the low for the week or the low for the session, and then that move up into Thursday's close, and then it continues into Friday's session, after the fact, people are going to go, yeah, look, late in the day on Thursday, this is when we hit that, and we've been going higher ever since. Just something to watch. Sentiment is still neutral. We have PCE. This is a biggie, and this is what the Fed really likes to look at as far as inflation. We're going to be getting that index, including personal income and spending. We have advanced international trade, retail and wholesale inventories. Not a real biggie unless they're way out of line. The big one is the PCE. And then we have the consumer sentiment final reading coming out to see how people are feeling. The whole list of geopolitical events. I have this one highlighted because of the meeting in Wyoming and with the speech that'll be coming out. So our scenarios, we're still kind of looking at both because we're more midpoint. All the reasons that I usually talk about, these are headwinds that could hit the market, but the technicals are showing some improvement. Are the positive setups still on hold? Depends on how you look at them. Depends on how things play out on Friday. If we have an up day, those setups could really give some support. If the market doesn't like what it hears or just chops more sideways, then yeah, we'll probably have to continue to put our setups on hold. We're still looking at a possible up scenario because the technicals are improving and our rotation and our setups. Again, we don't really know right now. Do we want to just keep those on hold for the time being, or will it turn into something positive? The technicals are showing some improvement. We're regaining at least the shorter term moving averages. We're not really sideways unless you use the ADX with the moving average. It's a declining ADX. If you do use it that way, then you might be going more towards the sideways trend right now. So our conclusion then is the S&P is improving, especially in the short term, but it's really mixed in the intermediate term, showing some improvement, still mixed. Long term, we're still negative overall. So thank you. Have a really good Friday. I will prepare a full-blown video over the weekend in addition to the weekly video and the intermarket analysis video. So have a really good day. Let's see what happens on Friday, if it's exciting, and I'll talk to you in the next video.